Okay traders, this is the update for February the 3rd. Now this is an interesting bit of play here in yesterday's session because we're back at that 1100 level, which is about here, up on this grey line. Now that proved to be quite sticky in December, which almost had a magnet effect on the market. So if it was to rally up a touch, well, it'd come straight back down to 1100, and if it'd go underneath as well, we'd end up back at 1100 a few days later. So it's good that this system was able to keep us out of the next couple of trades from our previous long. So the trade that we were monitoring, which we were long in, triggered way back here on the 1st. So there it is there. Everyone can remember that because that's our last trade, and we got in at 1081.50, and that has ended up being in profit. Remember that our stop is where the yellow dot is. So we just stay in the trade there. We're up here, we stop out again here at 1093.25 odd. So we've taken 12 points there. So now we're naked in the market looking for either a short or a long. Short trade is red cross, long trade is green cross. So if the market goes through the red, that's a sell. Goes through the green, that's a buy. So it's the system is, or the future indicator is made so it keeps you out of that choppy period. You need a fairly heavy push of momentum to get you in a trade. So this is good that we've stayed out of these short and long trades here, and we've got no need to hedge until the market moves. So we currently have no trade on the table, with our last previous trade netting 12 points. So that takes us to 2% for this month, or January, February, and this is our first spread of the year. Now the options are at about 55% of their target at the moment, and that will drastically come towards its target as that time decay chews away at the option premium. So it's an unrealized profit at the moment. The profit we're after is 2213. So if we take this off at 70 or 80%, well, we're going to knock that figure down to what the realized profit is. But that's the 100% target there of the options, which is, you'll get that if you leave it until expiry period and the market lands inside your strike points. And we will just hedge our futures here on the other side as the S&P futures, either rally or sell off. We're either long or short. So at the moment we're at about break even. So that's great. That means this system is doing its job and that indicator is doing its job. All it is protecting against any possible push, long or short, in a drastic measure. That way you're not blowing your account up, you're making money either way. So for example, our last long trade here triggered on the 1st of February, so we were long, taking points all the way as that market moved up. So if that was to keep going, well, we're long from 1081. Our strike point's up there at 1215. So if we were to get up to 1215, we've taken points from 1081 all the way up to 1200. So you got 120 points of profit on the way up. So that's the beauty of this system. So that's the update for today, and we have another 16 days left, 16 or 17 trading days left until these options expire, and we will do another recap tomorrow. So thanks for joining us.